Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. It was a very interesting day in markets today, so let's get into it. All right, we saw a big increase in oilseeds today. Canola up 15 at the end of the day at 723.20. That's against the November. We saw Minneapolis wheat up 13 and a half to 634 and a quarter. Kansas wheat up 18 at 540 and three quarters. Chicago wheat up 17 and a quarter to 543.75. We got beans up 27 and a half at 1069 and three quarter. Soybean oil, which was leading most of this, was up 3 cents. That was limit at 51.19 today. Corn up 6 at 444.50. Canadian dollar up a little bit today. Most of the gains happened earlier in the week, 73.55. Live cattle and feeder cattle were both down today. We'll talk a little bit about those charts as we move through today. Fats at 212.45 and feeder at 306.42. All right, December soybean oil. What happened today? We saw the EPA announce biofuel blending regulations. I put a lot of detail on this into our weekly report, which was released just before I recorded this video. We'll get into how you can get access to that, but here's a couple of snippets from that report. The EPA proposed total renewable fuel blending to increase to 24 billion gallons in 2026 and 24.5 billion gallons in 2027. There was speculation actually earlier this week that those proposed mandates would be lowered. So this was a pretty big surprise this morning that came out from the EPA and from the Trump administration, hence why the market had such an outsized reaction. Now, when we look at the biomass-based diesel portion of the blending mandate, we see some significant increases. 5.61 billion gallons and 5.86 billion for 26 and 27. Of course, biomass-based diesel is what is where vegetable oil feedstocks are used in. So that was what helped rally, or that's very much what helped rally the soybean oil market today, as well as canola. All right, let's look at some charts. Here's what canola did today. We did see a move up to above $730 on the November contract. Just astounding gains that we've seen today. It did back off to 723 as we moved through the day, but that's to be expected. There's lots of rolling activity that happened today as well. We'll show a chart of that. Again, a lot of this EPA and biofuel information can be found in our weekly report. This is what the cover of that looks like. If you want to get access to that, please subscribe to our insights. We send out ad hoc reports like our hot takes after the USDA happened yesterday, as well as our weekly report. We also send morning updates to all our clients. This morning's included the biofuel mandate change information. So if you click on the subscribe button here, right here, it'll take you to this beautiful page where you can put in your information. It is only $99 a month. That's less than $1,200 a year. You can cancel anytime. So if you only want to try it for 3 months, 6 months, 9 months, whatever, if you only need it during the growing season, whatever you feel like, you can subscribe at any time, cancel at any time. You won't hurt my feelings. All right. Let's move on to the canola spread. We'll stick with canola here for a second. We did see the spread reduced considerably. Earlier in the week, it was around $20, $25. We've seen that sink now to $7.80 as the spread's moving. We've seen a significant shift in open interest and volume to the November. I've seen some companies start bidding off the November as their front month contract as well, with positive bases on that on the November, as opposed to using negative or option bases on the front month or July. What else rallied this market today? Here is WTI crude oil. It had an absolutely astounding day as well, rallying up to $74.63. It did come back a little. This was a result of hot war happening in the Middle East as Israel attacked Iran, including some top military advisors were targeted, as well as military and infrastructure targets. Iran retaliated with some drone attacks, from what I understand. But what's happening in the Middle East is a bit of a cooler situation. I wouldn't say it was cold, a cooler to a hot situation. This was also seen a little bit as a snub to President Donald Trump from Benjamin Netanyahu, as Trump kind of strongly suggested that Netanyahu not attack Iran at this time. So, Ben flexing his muscles a little bit, I guess, if you want to call it that. This, of course, helped rally the Canadian dollar today. Most of the gains of Canadian dollar that have happened this week have come at the back, and I'll just kind of mention 73.30. Sorry, 73.57 is where this stands right now. Um, so some of the best Canadian dollar valuations that we've seen in a long time. Again, most of the gains this week were on the back of the US dollar losses, but today we saw that energy correlation between the Canadian dollar and crude oil happen, as both the US dollar index and the Canadian dollar saw a rally today. So crude oil definitely helped us out today to get that Canadian dollar value up. Just another measure of maybe uncertainty in the market is looking at gold. We're not at all-time highs for gold. That was reached in the early or mid part of April, but we are seeing, a move back up towards $3,500 an ounce at 34.36 at this time. So, as a measure of economic uncertainty, flight to safety, the as contrasting and compared to the U.S. dollar, the investors are looking for safer havens for money that is, considered maybe a little bit more risk free. All right, we got a little bit off track there. Let's get back to grains and oilseeds. Here's what soybeans did today as well from a chart perspective. No new high here, but it did kind of, lack some follow through on the USDA yesterday. Not that the USDA was bullish soybeans; it was actually quite neutral soybeans. The USDA didn't change anything on the US balance sheet yesterday. They didn't change anything, if I'm remembering correctly, on the production of South America either. I'll have to check that, but you fact check me on that. July, but we saw a rally today off soybean oil, obviously. So it was a really good day for vegetable oils. We even saw some follow through in the corn market today. Again, this market has been behaving very neutral, very difficult to get this market to rally. Still hasn't punched above that 20-day moving average, and really hasn't moved above the kind of channel that we see here. If this is the top of the channel near 445, we haven't seen a break above that either. So, more of a neutral day, although it did close the week at the top of that range. Minneapolis wheat saw some gains today, bringing it back to previous highs at the beginning of June here. That's probably good for a lot of Canadian farmers here, as, we often refer to wheat here as poverty grass because it's difficult to make some money unless you get some good yields off this crop. And there is some risks coming into the Western Canadian area as far as precipitation and dryness goes. So we are seeing some of the commodities that we grow here catch a bid this week, as the weather has not been super favorable. Live cattle, as I mentioned, took a little bit of a hit today. It's been on the decline all week, but it looked a little bit more mild into Thursday. Today we saw a big sell off today, down to 212 on the fats. That does test the 20-day moving average. As you can see here, there is a significant amount of support at this 20-day moving average. So maybe this correction, moved it back to the 20-day moving average. Maybe this is a buying opportunity for those who are, like to trade this market. But a break below that 20-day moving average, because it's been such strong support, might be a bit more of a warning sign. So we want to watch for that. Similar thing in feeder cattle. It did trade a little bit on either side of this 20-day moving average back in May, before popping higher to new highs. It did trade down as well in a similar fashion to the live cattle, but did not move to go to that 20-day moving average, as we did see a little bit higher gains in this market compared to the live cattle as well. All right, moving into some weather situation here. Here is the growing season map as a percent of average precipitation. As you can see, lots of risk on this map, particularly, our full consulting customers are clustered in a lot of these red areas, to the southwest, southeast of Edmonton, and to the eastern part of Alberta, western part of Saskatchewan. So, our own clients may be feeling a little bit more of the bite on the dryness here, but there's lots of areas of concern in Western Canada as well. There was some concern alleviated in the south eastern part of Saskatchewan and the southwest part of Manitoba, um, but still lots of dryness concerns in Canada as well. Here is the accumulated precipitation in the past 7 days. So sometimes those growing season maps, if the year starts dry, it can continue to look dry through much of the year. Here's a accumulated precipitation map. As you can see, there are some little bit better areas here as far as precipitation goes, but still very, very light. Anything in the green is like 10 millimeters or less. As you know, 25 is the inch of rain mark. And so, most of the areas of Western Canada got significantly less, or pretty much all of the areas of Western Canada got significantly less than an inch, other than kind of this area to the east of Saskatoon, including Yorkton and Winnipeg in the southeast, which is a lot of pasture over there. So, not a lot of rain in Western Canada as a whole. What's coming? A little bit better of a situation, I would say. Anything in the lighter blue areas is getting close to an inch, inch and a quarter, maybe even inch and a half. Still dry though on that western part of, the eastern part of Alberta, the western part of Saskatchewan. Although we might see half an inch there, that would help, but wouldn't fix everything. I would say, lighter. Half an inch or so rains across a lot of Saskatchewan as well. Pretty deficient in Manitoba overall in the next, this is the 5-day forecast. So it takes us into Wednesday, June 18th as well. Some precipitation, as you can see here in the northern US, Montana, and the western part of Nodak, where there is some spring wheat grown. So we may continue to see spring wheat conditions rise as we move into the crop condition ratings on Monday afternoon. All right, that is all we have for you today. Thank you for joining us. We will see you next week. Hopefully it depends on how you like these markets. I like them exciting and volatile because it keeps it interesting. Perhaps you are the type that like it smooth and predictable. Either way, we'll see you again next week.